everyone. My name is Archishna Goli, and this is my NSMG presentation. This is my outline. First, I'll be discussing what stocks I invested in and what investment factors I considered when investing in these companies. Secondly, I'll be discussing my portfolio growth and loss statistics. Third, I'll be discussing what I learned from the stock market game, as well as from my growth and loss. And the fourth, I will be discussing why I believe I will be a good investor. So throughout the competition, I made sure to invest in a wide variety of companies, including food companies, technology companies, and various others. As you can see, almost half of the companies I invested in were considered environmentally friendly. To give some background on the companies I invested in, the first company I invested in was Canadian Solar Inc., which is a publicly traded company that manufactures solar modules and runs specialized large-scale solar projects. Some examples of their projects include the Oakley Solar Farm, built in Australia in 2016, and the Silver Creek Solar Park, which was built in Canada in 2014. I invested about $7,000 worth of shares in this company. The second big company that I invested in was the General Electric Company, which is an American multinational conglomerate that specializes in aviation, power, healthcare, renewable energy, and finance. Although the company has had some questionable environmental practices in the past, I invested in this company because the organization has rebranded and the organization itself has invested in clean energy technology research and development. The company also started a new Eco-Imagination initiative in 2005, which was intended to develop innovative products such as hybrid locomotives, fuel cells, low-emission aircraft engines, and water purification technology. And I invested about $5,000 worth of shares in the General Electric Company. Apart from these organizations, I also made sure to diversify my investments by investing in technology companies as well as medical companies. These companies were also renowned for their environmentally friendly business practices, even though they weren't necessarily considered to be involved in the environmental sectors. For example, the Hershey Company in 2019 actually signed the United Nations Global Compact and joined the Science Based Targets Initiative. And the company launched an agroforestry landscape program, which is focused on improving the well-being of cocoa farmers and strengthening the region's economic and ecological resilience to climate change. I invested about $3,000 in the Hershey Company. Some other companies that I invested in include Cisco, Ecolab, and Apple, which ranked number 1, 2, and 8 respectively in the top 10 green companies in the United States in 2018, according to Newsweek.com. And in total, I invested about $15,000 in these 3 companies. I considered a variety of factors when I invested in these various companies. The first factor that I considered was the New Day Sustainable Stocks list. New Day is an investment management company that researches how well companies have adopted responsible environmental, social, and governance policies, and it creates a daily sustainable stocks list. The two factors that I considered included, were the stocks on the list? And if so, for how long and what value did they hold? For example, Tesla was one of the companies that was consistently ranked on this New Day Sustainable Stock list, and its market value was consistently increasing, especially in the months of November and December, and even now. The second factor that I considered was the environmental background. Did the companies specialize in renewable sources and technology? And if not, were their business practices considered environmentally friendly? The third factor I considered was medical background. Because of COVID-19, many vaccine companies were greatly increasing in stock value. As a result, I invested in Pfizer and Moderna. And I also looked and researched at other vaccine companies and companies that were invested in creating personal protection equipment and equipment for hospitals. The last factor that I considered was the daily and weekly news. I used trusted websites such as Yahoo Finance, the Wall Street Journal, and Business Insider to examine which stocks were on the rise and which ones were reducing in value. And I knew that Tesla shares were important when I read an article by Business Insider in which a billionaire investor greatly emphasized the value of Tesla's stock. And he predicted that the stock market value could triple from the current levels of Tesla stock, which is about $900 per share. My gains and losses. My biggest gains came from the Hershey Company, the General Motors Company, and Tesla. My Tesla stock value grew about $4,000 in terms of the shares that I had. That was my biggest gain throughout the competition. My second biggest gain was the General Motors Company, in which the value of my stocks rose over $700 over the past few days. My third biggest gain was the Hershey Company, in which my shares rose about $200 in value. Some other gains included more of the environmentally friendly companies such as Ecolab, Agilent Technologies, and Semper Energy. My biggest losses, however, came from the Pfizer and Moderna vaccine companies, as well as my other type of diversified investment, which included municipal bonds. I consistently lost about $40 to $50 in total on my municipal bonds in early December, although they did partly contribute to my positive percent return. My Moderna and Pfizer stocks, however, rose upwards of $40 due to their fluctuating value over the past 5 days. And my Treasury and municipal bonds lost over $100 from December 31st to January 3rd. My portfolio growth and loss. My percent return over the 6-month period was 5.77%. The historical average market return is about 2.93%. My percent return is much higher than the historical average, but it is lower than the 2020 average market return of 8.94%. And I believe that two factors contributed to my lower percent yield. The first one was my frequency of investment. I researched various companies and planned to invest every 3 weeks or so in my stocks. And looking back, I realized that in order to gain a significant percent from my stock investments, 3 weeks was not necessarily the most optimal time interval to invest. And I believe that if I had invested more often, I could have gained more from the stocks that I invested in. The second factor that I realized contributed to my lower percent return compared to the 2020 average market return was my pattern of buying and selling. Initially, early on, when I only looked at a few resources when looking at companies to invest in, I usually sold stock if the market value decreased over a period of 1 to 2 days. And I realized later on that many of the shares that I sold were in Tesla and many of the other companies that are on a stock rally as of now. So because of that, my realized gains and losses were upwards of $500. And I believe that that could have also contributed to my percent return if I had researched a little bit better and held on to those stocks before immediately selling them after they had lost in market value. What I learned from the stock market game. Overall, I got more experience with stocks and bonds with the stock market game. I learned that stocks are more likely to fluctuate in price, while bonds are more stable. I also learned how global events can significantly affect the market with COVID-19 and the various political events. I also learned which companies were more stable in the market than others. For example, although I did invest in many vaccine companies, many of the stories in the news cycle constantly affected their market value because a vaccine's value usually depends on its efficacy. As a result, due to the various news stories describing people who got the virus, even if they took the vaccine, I believe that those news stories did contribute to the market loss that Moderna and Pfizer and various other vaccine companies endured. Why invest in us? I believed I'm qualified to receive $100,000 more for my investment because my stock research was very thorough. I looked at not only the New Day Sustainable Stock List, but also the daily and weekly news and what other investors were saying about certain companies, whether they believed that the stock value of those companies could significantly fall in the future, although they were on rallies, etc. I also believe that I'm qualified because I received a good return based on my investment frequency during the competition. Although I believe I could have invested more often and gained a larger percent return, based on the investment frequency that I chose to pursue, I believe that I still gained a significant percent return. The third factor is because I have a relatively diverse portfolio. My portfolio included about 80% stocks, 10% bonds, and 10% municipal funds. And although that does not seem optim, although that's not the optimal amount or optimal diversity portfolio that one would like to see, I believe that I invested in the most stable companies in my stock value. So I believe that I could get more leeway in terms of what percentage I wanted to invest in stocks. And therefore, I decided to invest only about 20% in other diversified investments. Thank you.
Okay, good. I'll just change my. Just give me 1 second. Sorry about that. Okay, so fantastic presentations. Good job. Now, did you have your teammates before, or you decided to do this presentation on your? I mean, decided to participate on your own?
I initially had a partner, but unfortunately, she wasn't available to meet and invest regularly. So I decided to just pursue this competition on my own.
Sure. So that requires a lot of courage. So hats off to you. That's so one thing I found out based on. So I've been doing investment for last almost 20-25 years. I lost a lot of money in GE. And I know that GE sold significant of their healthcare portfolio to a Danaher company. But I'm just trying to question here is that why you think that GE has a growth?
I believe that their overall mission, I was inspired by their overall mission to invest in renewable energy and such. So I believe that they would be a good investment in the long run. I knew that they were reducing in stock value. So I did sell about 10 to 15 shares. I had about 30 shares in total. I did sell a significant portion of my shares because of their lowering value. But I decided that their overall mission and their involvement in renewable energy prompted me to at least take into account their company and their mission.
So how much money you did not invest?
In general, or
in general, out of 100,000, how much money was not invested? Or you can just say how much money was invested.
I think I had about $30,000, maybe $25,000 that I hadn't completely invested.
Okay. All right. So one thing I'm learning about your style, and again, this is all about learning, right? Yeah. Is that you are you are not a risk taker. You just want to do your research. You want to just go methodically, scientifically, and then invest. And there is nothing wrong. Okay. When I was the beginners, I was also okay, let me just make sure that I'm doing the right steps. And then I was less risk taker. So, and it's not about people who take more risk or high risk. They tend to get more returns on their investment. That's not true. But me personally, I put my 100% money in stock. So one thing I would like to ask you that why do you think that if you do trading more frequently, you'll get more returns? Because you did mention a few times that your frequency was less. Respectfully, I disagree. You don't have to do day trading to increase your value. You could do investment, or you could just do your trading once a month also, depending upon your stocks. So why do you think that your trading frequency could have impacted your portfolio?
I think it comes back again to the excessive amount of research I did whenever I traded every 2 or 3 weeks. I
Mhm.
usually only bought from one company or sold to another company. And I believe that using that conservative mindset, I wasn't
Yeah.
able to take as many risks as you mentioned and gain a bigger return. It's not necessarily completely based on my frequency, but
Mhm.
also coupled with my extensive research on which stocks to invest in and looking at the news cycles.
Right.
I believe that if I had taken more risk and invested more frequently, I could have gained a bigger return.
Sure, sure. I mean, that's what my observation is also. And there's nothing wrong to be a conservative, nothing wrong. But over the period of time, you will learn that even though sometimes stocks tank for a couple of days, that doesn't mean that you do sell off. As a matter of fact, most of the time, whenever there's a sell off, I tend to buy because if you believe in that company, okay. All right. So when I look at your overall, so I do believe that you are very environmental ESG or ESR conscious, corporate social responsibility, environment. So I think that's hats off to you that you have done fantastic research. But as far as the return on investment, do you think your return on investment it has reduced because of this constraint given to you that you have to invest in environmental friendly company? Let's say there were no constraint. Do you think you could have earned more money?
Perhaps. I believe that even without the constraints, I still would have invested a significant portion in these environmentally friendly companies.
Very nice.
But if I had been given more freedom, I would have maybe invested in some of the bigger companies like Disney or Walmart or those more commercial based companies rather than these smaller environmental companies.
Okay. Uh, if I know that he did answer that if we give you $100,000 more, your trend will be conservative, aggressive, or moderate. When I say trend, that means trend of investing.
I would say it would be less conservative than what I had been doing before. So about moderate,
Mhm.
taking more risks, even when stock value was tanking, and still looking at the shares and looking at the overall growth,
Mhm.
but still doing some research as to which stocks investors believed would be more sustainable or would still increase in stock value for the foreseeable future.
Okay. Uh, no, this is great. I mean, all I can say that you need to experience a little bit more, and then you will see that your strategy. I can tell you that it's workable, it's doable. You are doing research, you believe in your research, and that's great. The only thing is that your the way you want to when you want to abandon the stocks, when you want to sell your stocks, and when you want to buy the stocks, do you want to buy the bulk quantity instead of experimenting, let's say 5,000, 10,000? One thing I have learned is that you can always do investment incremental. For example, you set target for $20,000 for, let's say, Tesla. Then you can say, I'm going to buy 5,000. If there's a dip, I'm going to buy another 5,000. So you can grow that way also. So you will learn about that technique that if you believe in some stocks, then you can allocate a little bit more money also. What's a little bit disappointing for me is that since you have done such a fantastic research, you have not used entire $30,000. I mean, you have not used entire $100,000, right? There were $20,000 to $30,000 unused, right?
Yeah.
I wish. I mean, believe me, with your research style, you could have earned more money.
Yeah. Okay.
Any question for me?
Um, so what is your overall investment strategy when you invest in stock? Since you mentioned that you usually put most of your investments in stock rather than
Yeah.
bonds or yeah.
Right. I don't put in bonds unless it's there. But um, again, this is my personally, okay. NGN is based on certain values that we believe in environmental, social responsibility, and everything, which is true. We should be doing that. So I try to invest most. I tend to invest in more and more in ESR, environmental friendly companies, and then of course corporate responsible company. I'm a long-term guys. I don't do a day trading. I don't do monthly tradings. I like something. I set up a schedule that, okay, this is the company I'm going to buy. And let's say I said $100,000, and then I'm going to buy an increment of 20,000. And I set the value that if there's a dip, let's just buy it. Because if I believe in company, I'll keep on buying the stocks, right? So I think those are the kind of things will help you in long term. I'm a big fan of Warren Buffett. But again, nowadays, Warren Buffett has also invested in some of the unconventional stocks. So I think to answer your questions, I'm a very aggressive investor, 100% stocks. I don't get scared with if there's a market tank. Then to me, it's an opportunity to invest. Did I answer your question?
Yeah, I think because I'm a relatively new investor,
Yeah.
In general, I was on the much more conservative side.
Yeah.
Do you see that trend in a lot when you invest and when you see other investors explaining what stocks they want to invest in?
Well, before you, there were other judges, but I did attend one. I think they are buying in bulk quantity. What I noticed that one of the last presentation, they buy in bulk quantity instead of 5,000, 10,000. They say, look, I have 100,000. Instead of having 50 different stocks, let me invest in 5 or 6 different stocks. Again, that's up to you. You can normalize your curve in your, or you can average your returns however you want. So you have invested in many stocks, right? So what happens is that sometimes it's not easy for you to focus on one company, right? It's not easy to manage so many companies. So you may want to reduce the number of stocks. That could be, you may want to invest in what do you call it, the S&P, wherever you feel like it. There's a trend over there. But again, reduce the number of stocks. That way it will reduce your burden on research also. And then increase the amount of money, so that $30,000 you did not use it, that does not help you. But over the period of time, you could have said that I can have a scheduled buying also. If something goes down, let me buy more. Okay.
Okay. Yeah.
All right. Thank you very much. Take care.
Thank you.